Well, I guess let's get this session started. It's more timely than ever. We are deep in the M&A season, as people like to refer to. We have an absolutely outstanding panel today to discuss M&A, IPO, and deal making more generally in crypto. So let's kick it off with a brief introduction session. Alwyn, kick it off.
Hey, good afternoon, everyone. My name is Alwyn Clarke, co-head of investment banking at Galaxy Digital. I will give you a longer background later on as we get into sort of how we got into this, but I'll keep it brief for now.
Bonjour, I'm Laurent Bourquin. I'm the co-founder and CEO of MEV Capital. And been in crypto for a little bit too long, perhaps. So since 2017, and I launched MEV Capital, which could be seen as a vol curator and liquid fund specific on a market neutral strategy within those last 5 years. We now manage a little bit more than $2 billion. The only specificity we have is that it's fully on-chain and following a market neutral approach. Yep. And pleased to be here. Thank you for invitation.
Hey everybody, Casper Johansen, co-founder of Spartan Group. We have an asset management business where we have liquid fund strategy, venture strategy, and market neutral strategy. Then we have an investment banking business, which I run, where we do M&A and capital markets. And the M&A side and capital market side is what we'll be talking about today.
Awesome. And my name is Karl-Martin Ahrend. I'm a co-founder at Ahrend. We're an investment banking firm exclusively focused on the crypto space. 15 people around the globe and founded in 2022, ex-Blackstone and JP Morgan people. So, guys, let's chat about M&A season. Everywhere I go, I talk about investment banking, and it's like, oh, guys, you must be having a great year. Tell us how has your year been, Alwyn?
Yeah, look, it's been busy. In the shortest, in a sentence, look, this year has been all about M&A. If I look back over the last few years, there had been more focus on capital raising. It had been challenging to get deals done in terms of the bid-ask spread and where investors' minds were at in terms of confidence in the digital asset space, the crypto ecosystem more broadly. This year, we're seeing the stars align. And what does that mean? It means we're seeing founders and owners of businesses more interested in transacting and more open to coming to market. We're seeing regulatory shifts in the US and globally, which is making the space more attractive for fintech and traditional financial institutions. And we're seeing more crypto businesses go public. And what does that mean? It means more businesses that are able to deliver liquid currency into deals. So fundamentally, we're seeing a lot more M&A activity, both in terms of sellers who are interested in coming to market and buyers who are able to, one, deliver meaningful valuations, and two, deliver interesting transaction structures for sellers. So it's been busy on our side, but I'll hand over to others too to share their perspectives.
Yeah, or maybe before we ask Casper about his year, who in this room, quick show of hands, has been involved in an M&A transaction or IPO in their career, to level set? Okay, so we have a room of experts. Out of that group, who has been involved in a crypto M&A transaction or IPO? Okay, so that's almost 100%. We have a crypto M&A expert crew here. So let's go a bit deeper maybe, Casper. What do you think makes crypto M&A unique, even within, let's say, the more traditional M&A context? And yeah, tell us a bit about the differentiating factors that you see in crypto deals. Why, for example, also is an advisor with crypto expertise better positioned to work on crypto deals, or what is needed really when you take on deals as Spartan?
Yeah, sure. So I worked for a long time in traditional M&A at Goldman Sachs, where we would have industry teams. I sat in the natural resources industry. I covered power in form of coal, gas, nuclear, renewables, chemicals, upstream, downstream, midstream, oil and gas, upstream, downstream, midstream, infrastructure. So obviously, in each of those segments, I was not an expert, but I was running these billion-dollar M&A deals. And could kind of get by because these were like very late stage companies. The deals were $500 million and up. I think crypto is still, because we're still quite early, I mean, there have been up to $3 billion kind of transaction sizes with the Deribit deal, but generally the deals are earlier stage companies, which requires more work from the advisor as part of the transaction to kind of just get the company ready and a deeper understanding of the industry. It's also, a lot of the companies have relatively young founders who maybe this is like their first job or they haven't done that many other things and they're very passionate about crypto. So I think to get a good outcome of a crypto M&A deal, you need three things. You need M&A product expertise, which you only get by doing it for 5, 10, 15, 20 years. It's not like a fundraising round. You can pitch to 100 investors, you have a good pitch, you're a strong founder, you can get it done on your own. Like, I think there's value to an advisor, but an M&A transaction, I do not recommend a founder undertake that by themselves. The second is you need a crypto network. You need a network of people that have an idea of who's a right acquirer for this asset. It's not like a fundraising round where you just hit 100 names and just, you know, you have this funnel that you go through. It's much more bespoke. And then you also need an understanding and passion for the industry and the business so that you can position the company right. So just to make a small plug on that point, I would say we're starting to see what I would call non-crypto native advisory firms come into the space. So the three of us, Galaxy, Arena, and Spartan, we're all crypto native. We're starting to see other like mid-sized banks come in and some fintech banks come in also and take some market share from us. But I do think that if I'm a founder, I would want, you know, by all means, you know, have people pitch for the work and then select your best advisor. But I think being crypto native is very important to get a good outcome on an M&A deal.
Yeah, I mean, I will pick up on that point because I would say it does not just apply to your M&A advisors. Something that we're very thoughtful about when we're working with our clients is making sure they have the right support across the transaction, whether that is counsel, whether that is accounting, whether that is audit. You need the right people around the deal who understand A, how to get deals done, but B, understand the nuances of crypto and what that means for your transaction. Because what you don't want to be doing is paying people to learn. Fundamentally, you need people who are able to come and deliver meaningful advice and get a deal over the line for you.
Yeah, and that's, I think, even leaving aside the fact that we may see more and more deals actually involving tokens and having unique structures that obviously outside of crypto would have been unthinkable. And so, yeah, there is a new paradigm, I think, evolving in the crypto M&A space, which we're all very excited about driving. And yeah, I think we're seeing an really early innings also on the on-chain and token M&A spectrum. Laurent, how have you seen this year, really? Also, ex-investment banking background, you probably have a very nuanced view as well, especially maybe around token M&A, anything you see in the on-chain world that you think is worth sharing?
Yeah, at the difference to my colleagues, which are more on the M&A side and early stage of any deals, with MEV Capital, we will come more at the late stage. So once the project is live, you need a liquidity bootstrapper or a vault curator to really like to bootstrap, to foster what my colleagues first invest in. The year has been busy, not to take back your term, positively busy. We saw, of course, more institutionalization, not only in crypto, but more specifically on the DeFi sector. I remember like a couple of years ago, we were just between a small scene of crypto bros, as we used to say, to now a more regulatory compliant sector that basically make a huge metamorphosis of what we were doing like 2 years ago. Now I see a real change of the industry that become way more institutionalized. Regarding the M&A, like as a whole, or token M&A, if I may say this way, well, the market is extremely fragmented yet. But thanks to some like, would it be MiCA compliance rules or more clear Genius Act regulation, it allows us to go to the next step on DeFi. And it's true, like I think those next 6 to 8 months, we will see a bridge between like traditional finance to more DeFi. And I'm really happy to work with you guys to help the sector to go this way.
Awesome take. And I mean, we are obviously in the largest or hottest M&A window we've ever had in the industry, but let's maybe discuss a bit, and we haven't even talked about it between us, but where do we stand in that cycle? Like, are we seeing the top? Are we nearing the top? There is so many good conversations now happening, which, at least in the history of Areta, which has been basically one cycle, we've been, yeah, I mean, just amazed to see also the new interest coming in. Spent some time actually yesterday with buy-side funds, mid-market PE funds, now looking at crypto assets, which is just an amazing dynamic to see. And as ex-Blackstone private equity professional, obviously want to see more and more of our like-minded financial investors come into the space and help institutionalizing what are already great businesses. What else? What are the trends that you're seeing, Casper? Are there, I don't know, traditional buyers coming in? What are the dynamics you're seeing on the ground that may lead to us thinking we're more advanced in the cycle? And or yeah, just share a bit of your thinking on where we stand.
Yeah, sure. We started Spartan in 2017, so I've been through a few crypto cycles already, and then I'd say we're definitely at a very strong point in the cycle since, or still. This weekend, this massive drawdown that happened and a bit of shock to the market. It's early days. I mean, it's only a couple days since that happened, but in past cycles, I've seen something like that really jolt M&A deals. Even though M&A deals should be long-term and strategic, they're actually very susceptible to market moves also. And this time around, I didn't really feel any of the buyers where we're on the sell side flinch. So that's very positive. At the same time, to your point, I am starting to see some more traditional buyers, and not just like buyout funds, but also strategics. Like if it's a data company, maybe like traditional data company. If it's a regulated exchange, maybe, you know, more traditional fintech buyer poking around. And that to me is, if you think of the market in quartiles, it typically comes, from my experience, in the third quartile of the market. And then you got to get a deal done with them before you hit the middle end of the fourth quartile, because those players will disappear immediately if the market becomes a little bit fragile.
I love that answer. So we still have one quartile to go. Alwyn, how are you capitalizing?
I'd say one and a half to two.
Okay.
Yeah.
What do you think, Alwyn?
Look, if I could call the top, I'd be on a beach somewhere sipping Mai Tais, from completely honest. And I see some familiar faces who have heard me say that before. I would say, though, that this is, you know, as people in the room who are thinking about undertaking strategic M&A, and that's the word that Casper used there, strategy and strategic thinking is the right way to think about this. From a seller perspective, of course, in the moment within a particular process, you want to obtain the best deal possible. But there are multiple different ways to construct the right deal. And that doesn't just necessarily mean top-ticking the headline valuation. It might mean, how do you get the right amount of liquidity up front? It might mean, how do you make sure that you participate in the equity upside for the long term? It might mean, how do you make sure that you are able to, if you're thinking about moving on to do something new, able to exit the business within the right time frame that is appropriate to you. And so there are a number of different factors that I would be thinking about as a seller. From a buyer's perspective, you know, again, to Casper's point, I think there are some buyers out there, particularly the non-crypto native ones, who worry about, are they about to buy at the top of the market? But really, this is about the real strategic buyers understand that this is a long-term strategic investment. And this is not about generating return in 2 years or 3 years or 5 years. It's about positioning your business for the next 10 years or 20 years or 30 years. And those are the buyers who have conviction. Those are the buyers who don't flinch when they see a small drawdown over the weekend. Small. And that's what we're bringing together. And I think today in the market, we are seeing a much larger pool of high conviction strategic buyers who are able to deliver value. And we're also seeing founders and management teams take a more strategic view around where does their business end up and what does that mean for the long-term value creation for them.
Any interesting or particular verticals you're thinking about?
I think today we're seeing a lot of focus on anything that you could loosely term infrastructure. And so that has different meanings to different players in the space. For some players in the space, infrastructure means being able to offer non-custodial wallets. For some players, infrastructure means being able to offer spot trading. For some, it means derivatives trading. For some, it means staking and yield on chain. But they all wrap it in this language of infrastructure. And I think that's important because it tells you where people's heads are at, which is that they are thinking about, how do I build a platform that I can continue to build on going forward? What are the building blocks that I need to have a long-term position in the market, as opposed to what is a product that I can monetize over the next 12 months?
On the point of yields on chain, Laurent, what is there to see currently that would let us conclude on where we're trending? Any specific dynamics you've been seeing lately, whether that's with LPs, on your strategies, on money movements that you find noteworthy?
I don't know. I would like to coin like low risk DeFi may occur now. Like we have been doing DeFi for those last 3-4 years professionally. Now, for example, the last partnership I succeeded to call in is with a French bank called Société Générale Corporate Investment Banking. This bank now asks liquid fund and curator such as MEV Capital to originate and distribute Euro stablecoin. Sorry, I'm pro-European. I would like Europe to have their own Euro stablecoin. So please let us try, at least. And then, yeah, like yesterday it was a foundation or Ethereum ICO participant that used to be and still are our LP. Today is multinational banks that try to originate and foster RWA or stablecoin within the ecosystem. So to me, it shows the color of what will be DeFi within the next decades. I thought DeFi would have turned permission DeFi, or some say corporate chain DeFi. But with Société Générale, we just realized that this bank, which is the second biggest one in France, is distributing their products on a public chain without any permissioned barrier. So I'm extremely positive to where DeFi is going. It's just that it will change. The APR will change. The degree of conservativeness, if it's a word, will change. I think next client will become way more risk averse. So it's also the work of Spartan and of MEV Capital to propose what we call the risk-adjusted yield. Yeah. And to get back on your point, what happened this weekend, I would like to highlight that CEX, we saw again the limit of centralized exchange, while on DeFi, liquidation went well. No bad debt has been reported. Uniswap and other protocol didn't went off. It was still working every minute. So I hope you appreciated the resilience of DeFi during those kind of black swan. So I think DeFi has been a little bit undervalued for what it was. And again, this weekend, we show the resilience of DeFi compared to CEX.
Yeah, definitely a highlight in what otherwise, I guess, was a more dramatic or a negative weekend for all of us here. Another highlight I want to say over the last 3 to 6 months was obviously the wave of IPOs, driven by the largest US conglomerates exchanges. I know, Casper, you followed them pretty closely. Share a bit of context or set the scene for the IPO landscape currently, and then we can talk a bit about what's to come next and what that actually does to our work also more on the M&A side.
Yeah. Okay. So we should definitely talk about that because IPO has a massive downstream effect on the M&A market. But in terms of the IPO market overall, obviously it was kicked off with the Circle IPO that went above all expectations and is still trading at a good level compared to the IPO level. For a long time, probably since 22, there was a pretty active and liquid secondary market in shares of Kraken, Circle, not so much Gemini, but some bullish, and a bunch of the other companies that are kind of scheduled for IPO now, where they were trading hands at very attractive valuation. Our fund picked up some of those too, like early employees selling, funds that just needed some liquidity, because there just was no outlook to getting any liquidity in these shares. So people are happy to sell at 70% discount to the latest round. So now with the Circle IPO happening, which is also very much a regulatory political thing in terms of just the SEC being willing to sign off on these IPOs. So the political situation in the U.S. definitely has played a massive role in that. And then, I still think we saw Circle, we saw Figure Markets, we saw Gemini, bullish, and it's still a relatively fragile market from the perspective of there's still not that many comps out there. So I'm kind of holding my breath every time a new one goes out, because if one of them doesn't go well, it will impact the next one in the queue. We're not at the point where there's 20 of them, and if one goes bad, you could point to that one and say, oh, there's specific reasons why that went poorly, but the next one will be fine. I think we still relatively fragile, but it's great to see the market opening up.
Totally, and I mean, more IPOs means we get more quarterly reports, more eyeballs from Wall Street, and I think it just makes the space a lot more institutional, and the crowd of, or basically the people looking at the space just shifts over time, right? And I think that's a huge indirect benefit to everything we do on the deal making side. Alwyn, how do you think it affects your business? Also, obviously, one of the largest US conglomerates.
Yeah, fundamentally, it's good for M&A. As Casper says, I think having public comps is helpful. It helps that particularly the non-crypto native players who are looking at the space think about valuation and what makes sense, and compare business models as they get a bit more transparency in a format, to your point, that Karl, that they can understand and digest. It also helps more broadly, right? Because I think we've been in a period for the last few years where the exit options for investors in crypto businesses were relatively thin, because the M&A market was challenging and the IPO market was closed. Since we've had the new administration come in the US, an IPO is now a viable exit. And that's very powerful, because what does it mean from specifically an M&A perspective? It means you have a tool you have access to a tool that we didn't have access to before, which is the dual track process. And this is where, you can bring in an independent financial advisor like the players up here who know how to run an M&A process, but also know how to prepare for an IPO process. And that allows you, when you're going to market and thinking about M&A options, to have another option, another lever that you can pull in terms of bringing competitive tension to that process. And that's always powerful. In terms of thinking about executing that, from a seller's perspective, there is a lot of overlap between the materials you need for an IPO and the materials that you would use for a sale process. And with the right team around it, you can manage that very efficiently and very effectively. So net fundamentally, more IPOs is very good for the space. It helps with M&A momentum. It helps deals get over the line. It helps with pricing deals. And for sellers in market, it materially helps with them in terms of thinking about their opportunities and how they want to exit the business.
Totally, and I mean, it just, I guess, increases the amount of viable buy-side candidates we have in the space. I mean, now having, billions of liquid equity and stock is something, I mean, it's a huge development of 2025, and it's something that we all didn't have access to also when working through our sell-side M&A mandates. And I think what's maybe useful also for the audience to understand is that people that are in the queue for an IPO process, they typically stop looking at M&A 6 months, 12 months before the IPO, because too many things could go wrong. You need to get the accounting right, integrating an acquisition, while basically the entire firm is just looking forward to that IPO. It's just something incredibly tricky to do. So all these guys getting through the queue now is actually just, I think, spilling oil into the fire of larger M&A transactions. And so quite keen to see these guys now coming back to the buy side and getting very active. It's needed for their public story. They have a lot of liquid stock to now also do interesting acquisitions. And you know, in public markets, story sometimes is as important as the execution. And so viable M&A strategy and showing the market that you are able to integrate businesses and look forward and do acquisitions is, I think, something that we'll see a lot from the ones that have already gone public, and then I guess even more so from the ones that are yet to come. Maybe now we're just shy about 10 minutes left. Laurent, tell us what you're looking forward to also on the on-chain space now. A brief outlook. What are you watching? Help the audience understand from also the American yield perspective. What are the interesting trends to follow? Anything to spot when thinking about the next couple of months and quarters?
I think it's the CEO of BlackRock that say that there is $1 trillion of tokenized asset that will come on the market within the next decade. So I agree with him. However, those last 6 months, I think we refused around 60 RWA projects. DeFi is not the bean for like low-rated credit risk assets. RWA will be there. RWA will be the next big thing. RWA is almost infinite. You can tokenize anything from FIG to real estate to export finance to gov debt to corporate debts to credit cards, loans, to anything. But it also comes with all the risk, because actually the probability of default, the probability of recovery is totally independent from DeFi. So this bridge between the real world assets, which actually in bank, we call it risk-weighted assets, so that's why the acronym is a little bit weird. But so the bridge between RWA and on-chain is absolutely another world. Now I think every DeFi fund will need to have their own credit risk analyst. The risk of counterparty of a smart contract is not the same of a risk of counterparty of a collapse of any underlying asset. So let's be careful this time about RWA. We tried, I think, back in 2022. It's totally failed. Maybe this time will be different, if I may say. It will come, but we have to be extremely careful not to mix again on-chain with off-chain. But the bridge is there. The bridge is there. So it's not if, but it's when. So RWA narrative is something to look at. Stablecoin narrative, I know you already heard it like a million times, but it's coming. It's not just on the news. Every bank these days wants to have their own stablecoin. Would it be to, I don't know, sell their repo or sell their banking activity through their own stablecoin? But again, DeFi is not the bean to do recursive borrowing on illiquid assets. So I hope all our sector and ecosystem will be extremely careful about the incoming wave of RWA. Yeah.
Cool. Thanks for sharing that. And maybe Casper, famous last words, but how would you think about an M&A process and the timing now if you were a crypto founder? Like, what would you watch? Is now still a good time to and thanks for the pitch earlier to appoint a crypto native investment banking firm to help you start a process. Are we already too late? What should people watch really, and how would you think about timing?
Yeah, we have that conversation with a lot of founders, and we always give very honest advice. And when we're talking to people, the last couple of years have not been easy. I mean, 22 was obviously a disaster of a year, and then 23, 24 were very difficult to get M&A deals done because of this mismatch between buyers and sellers, and just people couldn't raise cash on the one hand. People didn't want to take their equity on the other hand because it was illiquid. There's a valuation mismatch. Now, you know, as Karl-Martin mentioned earlier, there's a kind of a meeting of the minds between buyers and sellers. We're getting deals done. So with that preface, I would say to any founders looking to sell, like now is absolutely the time to start a process. If you wait, like the market window concept is very real, also in M&A. I would say in a typical 4-year cycle, you're probably within 18 months is where you get 80% of the deals done, and we're in that window now. So unless you want to wait another 3-4 years, now is actually the time to start a sales process. And there are certain subsectors where there's a lot of consolidation going on, and there are still a relatively limited pool of buyers for some of the assets. So there is definitely an advantage in some of these sectors to be first out, because it might be a bit of musical chairs where someone needs a company that does X, and there's only 5 buyers but 10 assets, and if you're kind of sitting around waiting, there might just be no buyers left at that point in time. So yeah, good time to start a process now. I wouldn't wait.
That's a clear message. Time is now. So let's get going. When any final messages from your side to founders and clients out there?
Yeah, look, I think picking up on where Casper just ended, be prepared. Some of the most successful processes we've seen over the last 12 to 18 months are because teams were ready to go, whether it was on the M&A side or whether it was on the capital raising side. And you can start that prep work today without going to market. But, you know, I see this all the time. I'm sure you guys see it all the time as well. We get phone calls from boards or founders who want to launch a process yesterday. The reality is there is a prep phase, and it takes time, and you want to go out with quality materials, a quality story, really understanding the market. And so the time to start prepping is today. Look, the only other point that I'll mention is thinking about the fact that the IPO window is open, opens new alternatives in terms of that in-market consolidation. M&A isn't always an exit. And so increasingly we're speaking to players about mergers and merger of equal type transactions, where we're looking at 2 parties who, and in one case 3 actually, who independently are not ready to go public, are not of the scale to go public, but together would be a serious candidate for an IPO that people would really pay attention to. And so I would say start having those conversations now, start thinking about it now. These are really strategic decisions that shouldn't be made on a whim.
Absolutely. And I think also maybe quick message to founders that are still considering going out or not. We hear a lot of, I think, reservations around, okay, how is an approach in the market going to be perceived by, I don't know, potentially competitors finding out, potentially buyers, clients. And I think key message is don't be shy. I mean, as Casper said, there is a window, right? That window is as hot as it gets. We're in definitely no regret territory. And it's impossible to time the market. That holds true in, I guess, every aspect of life, but certainly also on the M&A side. And there is so much you can learn in, you know, broadly speaking, corporate development process. A lot of actually interesting business conversations can come out of it, partnership conversations, and simply also understanding a bit of where people that have a vested interest in your segment, in your company, would like to see the business grow, where, you know, effectively having people shoot holes in your business is, I guess, real value add to, I think, any founder and management team that is acceptable to that. So, you know, don't be shy. If you're lucky to, I guess, work with someone on this panel, then I think you're already in good hands. And, you know, let time and the market tell you where where you should grow the business, and also whether it's potentially better kept inside a larger organization where the next phase of scale or growth could be achieved with a larger with a larger partner. But with that, I think thanks so much to our panelists. It was an amazing discussion, and yeah, let's see how long we have in terms of market, and let's get a couple of deals done. Thanks for tuning in, everyone.
Thank you.
Thank you all.
Thank you.